All right, y'all. So in this video, we're going to go a little bit more into depth about trends. I know we spoke about trends in a previous video, and so in this one, we're going to dig a little bit deeper. All right. So, what do I mean by that? I'm going to show you guys exactly how to identify a trend and why the trend is so important. All right. So, how do we identify a trend? Okay, what you're going to do is you're going to zoom out of your chart and you're going to determine whether the market is overall going up or whether the market is overall going down. Now, let me delete all the drawings off of this chart really quick. All right, so boom. I'm going to just scrunch this a bit. And all right, so as we can see, I'm just going to be, you don't want to look too far back because that far back in the past does not really matter. You really want to just look at what's going on right now or for like the past day because we do trade quick trades. Let me just go ahead and go down to the 5-minute time frame. That way it's more realistic as to the way that we will be looking for our trends. All right, and let me zoom out. So I would say, okay, most recently I see that we have overall been coming up. This is about how far back I'm gonna look. Sometimes maybe even not that far, about like this far. All right, we are overall coming up. This market is overall expanding. So we are in an uptrend. It's that simple, okay? We are overall in an uptrend. Now, if I was looking back here, I would say, okay, we were coming up and then we hit a peak and now we are overall coming down. This market is overall shrinking. We're in a downtrend. All right, that's how you identify a trend. You zoom out and you say, okay, what are we overall doing? Like here, this is just a huge mountain climb up. This would have been an overall uptrend. All right, y'all see that? That's how you identify a trend. You zoom out and you say, okay, is the market overall going up or down? If it's overall going up, you're in an uptrend. And if the market is overall going down, you are in a downtrend. Okay? And so you guys already watched the video over bullish momentum versus bearish momentum, but I will go a little bit more into depth. All right. So if the market is moving very strong in the upwards direction, that means that we have a lot of bullish momentum. What does that mean? That means that we have a lot of buyers in the market. All right. If the market is overall going up, there are more buyers than there are sellers in the market, which means you want to be looking for buyers. Always want to trade with the trend, not against it. All right. So if the market is overall going up, there are more buyers than there are sellers in the market, which means you want to look for buys to trade with the trend, not against it. This would be a bullish market. All right. The market is overall going up. It's very bullish. You hear somebody say the market is very bullish. That means we're in an uptrend. We're looking for buys. That's it. That's simple. Okay. Now, if the market is overall going down, that means that there are more sellers than there are buyers. And you want to be looking for what? Sells. To trade with the trend, not what? Against it. And this would be a very bearish market because it's overall going down. If you hear somebody say, "Oh, Euro USD is looking very bearish," that means Euro USD, we're looking for sales. All right. That's how you identify the trend on TradingView. You just zoom out and you look at where is the market overall going, up or down. Boom, you have your trend. All right. So that's bullish momentum versus bearish momentum, and uptrend versus downtrends. All right. Now, when the market is not really moving, when the market is not really going anywhere, like let me find a good amount of time where the market just kind of was ranging, like right here. If the market isn't really going anywhere, you are in consolidation. You can take buys or sells, or you can just be biased and decide which one you want to take. But if the market is just kind of ranging back and forth like it is from here to about like here, if the market is just going like this, it's not really going up or going down. It's just going back and forth, back and forth, back and forth the entire time. You're in consolidation. The market is just ranging. And what that means is that the market is just bouncing from wall to wall to wall to wall to wall to wall to wall until you get a breakout. All right. Market is just bouncing around, which means you can trade either buys or you can trade sells. All you do in a position like this is you mark your areas, your pivot areas. Okay. So I would use a horizontal ray and I would say, okay, I see, actually, let me use a oval. I would say, okay, I see that when market came right here, I see that when market came right here, it fell a little bit. So I'm going to say, okay, when market comes around that area again, I'm going to use a horizontal ray. I'm going to take a sell. And what happened? Market came up. So it came to that area, it fell, and then it came back up to that area. And what happened? It took a sell. Okay. So I'm going to take that sell right there because I know that the market is ranging. Okay. So then after we take that sell and we see market drop, it comes up and then it stops here this time. Market comes up and it stops right here this time. So I'm going to put a horizontal ray there and I'm going to say, okay, if market comes and hits this line, if it comes back up to this point, I'm going to take a sell. And what exactly did the market do? The market fell and it came back up to that same area. I'm going to take a sell and boom, I just made some money. And then the market does it again. It comes back up to that same area and then boom, it falls. Okay. So that's how you trade a ranging market. You just identify where your support and your resistance lines are in that range, and you take your buys or your sells. Now, it's not going to work perfectly every time. It's not going to work perfectly every time because look here. If we would have had resistance right here, and we say, okay, we take this sell here, and we take this sell here, and then we say, okay, if market comes back to it, we'll take a sell again. What happens? It actually broke through. It actually broke up through that. It went up through that line. All right. and then we sold a little bit, and then what happens? It broke even higher. It broke even higher. All right, y'all see that? So it doesn't work perfectly every time. You will lose some trades like this, but you will overall be very profitable doing this. Okay? So that's uptrend versus downtrend versus a ranging market. All right. Also known as consolidation. Consolidation is a ranging market. It's just when the market is going back and forth. It's playing ping pong. All right. And so a trend cycle, let me show you guys what a trend cycle is. That way you guys understand how trends work. So a trend cycle, whenever you're trading a trend, you're going to get this kind of movement. Hold on, let me make this let me work in a blank space. So whenever you're trading a trend cycle, let's say if we're in an uptrend, we're going to get the market to move up. If we're in an uptrend, we're going to get the market, we're going to see the market make an impulse move up. It's going to get exhausted. It's going to give us a little pullback. It's going to give us another impulse move up past the last high. It's going to get exhausted. It's going to give us a pullback. Then it's going to give us another impulse move up. It's going to get exhausted, give us a pullback, another impulse move up, exhausted, give us a pullback. Okay? That's how uptrend works, because what happens? Boom. You see the market is just going up and up and up. All right? It's always going to make higher highs. It's always going to make higher highs. So right here we have a high, and then right here we have a higher high. And then right here we have a higher high again. And then right here we have another higher high. As long as that impulse move up moves higher than that last impulse move, we are still in an uptrend. All right. Vice versa with a downtrend. You're going to see impulse move down. You're going to get tired, give a pullback. You're going to get another impulse move down. We're going to get exhausted, give a pullback, give another impulse move down. Going to get exhausted, give a pullback, another impulse move down. As long as it's making lower lows every single time, we have our downtrend right here. And then we have our lower lows and lower lows. So here is a low. This low is lower than that low. This low is lower than that low. And this low is lower than that low. Okay. The moment that we get a higher low or a break of structure is when we are no longer in that trend. We have to be cautious. So what do I mean by that? Let's say we're in an uptrend. We get that impulse move up. We get that retest. We get that impulse move up. We get that retest. We get that impulse move up. So right here, we're in an uptrend. But then what happens if we see price come down and it goes down past, or let's just say we see price come down, and then instead of making a higher high, it makes a lower high. It doesn't go higher, it stops right here, and then we see it start coming down past that low. All right. Notice that every time we're going up, it's like stairs. There's this low, and then this low is higher, and then this low is higher. Same thing with the highs. There's this high, and then this high is higher, and then this high is higher. So the moment that we create a high that's lower, that's a lower high, and then a low that's lower, that's a lower low. The moment we see that, we say, okay, this don't look like no uptrend no more. It means we're reversing. And then we're going to see market come down, come down, come down, come down. Okay. So what happened? We went from a uptrend to a downtrend. All right. So you guys have to be aware. All right. So now let's look at some real live examples of a trend. So if I show you guys, like right here, we have market move up, create a high, create a low. Boom, we create a higher high, higher low. Boom, we create a higher high, a higher low. Boom, another higher high, higher low. Okay, y'all see that? That is the market overall moving up. All right, now let me show y'all a trick real quick. This is how we get our buys and our sells. Market's trend moves based off of support and or resistance, okay? So if we're in an uptrend, we're moving based off of support. If we're in a downtrend, we're moving based off resistance. Watch this. So this level of resistance right here, because whenever the market gets exhausted in an uptrend, that is its resistance, okay? Just remember me saying this right here. Just remember me saying this right here. Previous resistance becomes future support. Previous support becomes future resistance. What does that mean? All right, you guys should know support and resistance by now. So let me show you guys right now. So this uptrend right here, we're moving based off of support and resistance. All right. So I'm going to start with this peak right here. So boom, we get market, make this impulse move up, and then it makes this drop down. All right. So this impulse, this peak right here where market tired out is going to be our resistance. So we're going to mark that as our resistance. We're going to put a horizontal line there. We're going to mark that as our resistance where the market got tired out. Which means what? That is going to become support. So we're going to wait. We already know this is in the uptrend. So we already know that this is going to break through this resistance. We're expecting the market to make a higher high. So we know that the market is going to continue up. And we're going to wait until we see price come back down, and we're going to take the buy at that previous resistance because now it should be support. And if you see what I see, you see that right here, this is where it was resistance, it fell, and then market came up. And if I zoom into there, you can see that market came right back down, hit this, and then continued up. All right, y'all see that? This previous resistance became future support. How did we know where to take our buy? Because we knew that this is where market exhausted. So we know that market is going to come back to that exhaustion point and then shoot up. Okay? All right? Same thing here. We get market make this impulse move up, show us some exhaustion, and then continue up. But that impulse move up, whenever it got exhausted, we know that that is now our resistance point. So we're going to wait for price to come back to this line, and we are going to take a buy. What happens if you see what I see? You see that market did just that. Market hit this area of resistance, it shoots up, but then what happens? It comes back down, it hits it, and then it shoots up. Okay, we all see that. That's previous resistance becoming future support. Okay, that's how we know where to take our trades, and that's what we wait on. We be patient and we wait for the market to come to exactly where we want it, like a trap, like setting a booby trap. As soon as market touches where we wanted it at, we take that trade. All right, it's vice versa for sales. It's vice versa for sales, okay? So that's the trend cycle, that's trends, and that's how we capitalize off of the trend and support and resistance. That's why we take buys at support and uptrends and sells at resistance and downtrends, because we see that pattern and it happens the same every single time. Okay, there are some times where it's going to break through, or it might stay at the resistance, or it might start consolidating. And yes, you may lose a trade, but your win ratio is going to be much higher than your lose ratio. Okay, all we trade is the support and resistance based off of the trends. All right, so that's how that works. And yeah, so in the next video, I'm going to go a little bit more into detail over how to use pocket option and how to use this trading platform right here, which is TradingView. I'm just going to go a little bit more into detail for you guys. But that's going to be it for this video. So I will see you guys in the next one, over more details and your markups, indicators, favorites, and things like that for how to use your trading broker and how to use TradingView right here. So I will see you guys in the next video.